We got some earnings to hit this afternoon. I've got Renita Young here with me and Kevin Green on the line. Good afternoon, guys. Nice teamwork. We're going to start off with a bit of a sell-off here. Well, maybe not. We're bouncing around in Autodesk in the aftermarket, but it does look like the first tick is lower to about $205. We'll see if that holds. Closed at $221. A lot of chop in the early trade. The earnings came in at $1.86. Street was looking for $181. Sales were $1.32 billion. So pretty decent, middle of the road meet to a slight beat on the bottom line. Thinking about the outlook, earnings of $6.98 for the fiscal year adjusted. Next quarter between 74 and 80 cents. Stock has been over the last several months grinding its way higher and much more stable than a lot else in the cloud sector. So I'd be surprised if the stock stays down where it's at. It might just kind of be light volume trading here because it looks like a pretty solid report to me, Renita, at first glance.
Absolutely. So one of the places where analysts were looking at were the billings. They were looking at billings to be slightly softer than expected since they missed expectations in the third quarter. And that was, of course, as a result of the headwinds from foreign exchange fluctuations and the shorter duration. Management also highlighted macro headwinds in the prior quarter, reducing that guidance, which happened when they let out third quarter results. And also some analysts, they're looking at Autodesk to beat since it's been bringing higher levels of promotions for customers. And it looks like it tracked along with that as well.
The stability of this stock as a dividend payer, reliable cash flow machine, Kevin Green, does that put it in a different category as far as cloud stocks go?
A little bit. Obviously, we are also focusing there on the software side of that business as well, but it has been able to generate some pretty stable earnings. If you could, obviously, we just talked about some of those numbers as well as some of the guidance that they are providing. So I do believe so. There's not a lot of volatility that was actually brought into this stock going into earnings as well, Oliver. I mean, we're looking at a 5.7% move to the upside or downside. We saw that initial tick to the downside, but in the after-hours session right now it was trading at like $8 for the spread itself. So yeah, some of those trades that we are starting to see come through are trading on pretty wider spreads, which is why we're seeing a lot of that volatility in the stock at this point.
Okay. All right. So we'll keep an eye on it. It would be definitely rare to see that type of decline. And it does look like maybe that was just kind of a light volume couple of prints. I would expect more volatility in some of our other names this afternoon, like Block or Beyond Meat. George is going to talk Carvana with us, which is coming out later. Let's talk a little bit about what to expect for Block. Kevin, run us through that as we wait for the numbers. You gave us the preview this morning, so I want to come back to you and have you set the stage for us. I think this is, at least for me, I think it's the most interesting one.
Yeah, definitely. Obviously, we're going to be looking at their overall structure of their business. They have really three main areas of their business. One is going to be transaction-based revenue. That's going to be obviously processing point-of-sale transactions, things of that nature. Then they have subscription services, which is really the cash app side of the business. And then last but not least is Bitcoin and that revenue that they are generating there. One thing to just note and clarify, because I had a great conversation on Twitter with somebody about this as well, that line item there is the amount of Bitcoin that they're selling to their customers, and then obviously the revenue cost is going to be the cost of getting that Bitcoin and being able to transact business as well. So there is some price risk, there is some volume risk that is associated with this that is set aside from really the innovations that they're trying to make when it comes to the cryptocurrency industry in itself, the blockchain technology, things of that nature. But they do have some risk when it comes to the price of Bitcoin, the volume of Bitcoin as well, and that's probably going to be reflected in this print. But they're probably also going to provide some optimism in their call as we have seen a rebound in prices in the last month and a half.
Okay. We will get there as it arrives. Just wanted to follow up on the billings number from Autodesk real quick, Renita, because we did see the decline in billings down 11 to 13% for the outlook. So for their fiscal year, they're telling us that things are indeed going to slow down. But it sounds like analysts did kind of have that in the ballpark of possibilities.
Right. Absolutely, they did. And so obviously it seems like a really palatable earnings report.
Yeah, I think so too.
Yeah, that people, they're seeing the expectations meet, or seeing the figures meet the expectations. So it's all good there.
All right,
we'll find out if people feel the same way tomorrow morning, though.
Okay. Yeah, I think so too. Pretty neutral. Beyond Meat. we're getting a little bit of a move here. Shares up to 19 bucks. Not the first time this thing has had a big move on earnings, but it has been a while since earnings have been a huge victory. We got that in August last year, but they quickly faded down. More so, we've seen the stock trending lower. Obviously, it was quite a big story back in 2021, and then just got annihilated 2 years in a row. Trading at 17 bucks by the close. Right now, we're higher to about $19.50. Looking back at the fourth quarter, the company saw revenues decline of 21%. So their net sales were $80 million, and they operate on a loss of about $3 million for gross profit. That net loss total was $67 million per share, about a buck. Adjusted, not much better actually. Adjusted, their loss was at $57 million, so barely a difference. And at least I like the fact that they're leading with the GAAP number and reporting that on their press release. So they're not trying to hide under it. This is a money-losing enterprise still, Renita.
It is, and this was well expected. You know why? Because demand for plant-based food has been going down. People have been trading down to cheaper protein like chicken, maybe some beef, as cattle prices have been regulating a little bit more. But it was not completely unexpected. And we're also looking at how the company is planning on growing these relationships that it has with McDonald's, with KFC, and whether or not it'll continue to put more of its stock behind this because of the demand that's waning for plant-based meat.
Yeah, this is had a while to be tested. I mean, what's the timeline here, Kevin, you think, to when this company is got to have the bottom line under control? They've been public now for about, what I say, about 3 years. The debut was 2020, yeah. And it's fairly ubiquitous. I mean, it's more present, not totally ubiquitous, but it's more present than it ever has been. You know, it seems early on, of course, it's going to be a CapEx-heavy, sales-heavy enterprise with sending out the people, sending out all the marketing, doing all the advertising campaigns. Obviously, you would expect the company to be losing money. What about now that you can actually order their stuff in like many, if not most places, and they're still bleeding on the bottom line like this? Is this too expensive? Is their margin not good?
I mean, the margin, obviously, they want to see that improve. They actually did say that they do plan on being cash flow positive by the second half of this year. That's probably why we are seeing the move to the upside. So I think that's kind of your answer, Oliver. If they're not able to hit cash flow positive by the second half of this year, then obviously there might be a little bit of a problem here. They're also... Yeah, they're still also making some restructuring changes here in the company as well. So that is going to be obviously a positive for them. But when you look at the earnings announcement compared to what the street was expecting, they did beat on the top and bottom line here. When you're looking at the adjusted earnings per share that they reported, it looks like it came in at $1.05. The estimate was looking at a loss of $1.13. So that was obviously a little bit better there. And then the revenue side of the business was actually better than expected as well. So, I mean, at the end of the day, yes, they're not cash flow positive at this point in time. They're not hitting the numbers or the positive numbers like we would like to see, but they are showing improvement. They are showing some confidence in their product. I've never actually had the product myself, but there is a market for it. And so they're trying to be able to expand as much as they possibly can, obviously, turn cash flow positive here. And hopefully they can do it by the second half of this year. But the implied move for this stock going into this earnings was 17.4%. So it's not surprising that we are seeing a pretty significant move either to the upside at this point in time. We might continue to see some of this volatility as we go into the market open tomorrow.
Volatility still the name of the game in fake meat. All right, so we got Block coming out. Quick thought on Beyond Meat to close this out, Renita?
I've had it before, and I have no comment.
I feel like it's a hard sell here in the Midwest. You know, I'm a Chicagoan myself now. You know, we're into the real stuff here, the heavy stuff. Okay, let's talk Square. Let's talk Block. But hey, it's still offered everywhere. To my point, it's like, you know, it's fairly ubiquitous. Also fairly ubiquitous. blocks transaction machines just about everywhere. But as Kevin Green outlined to us coming into here, this is a complicated company with a lot of different avenues, including, of course, the Cash App, including Bitcoin and the crypto stuff, which has been not doing so terribly great. And today, the earnings right now coming out as we speak. Stock closes 74 bucks, little change. I'm going to the website to pull it up, but so far, I think the expectation generally for this company, the bar has moved pretty low. That was one of the takeaways I had from our conversation earlier, Kevin, where I think at this point, after so many losses, we're not expecting this necessarily to flip positive for profitability yet, are we?
I mean, you possibly could see profitability. I mean, in the near term, yeah. I mean, the estimates are pretty wide when it comes to this stock here. And actually, if you're looking at an adjusted earnings per share estimate, the estimate right now is at 27 cents, but they go as high as 35 cents as well. So even the analysts themselves are really kind of mixed when it comes to this particular business here. And I'm kind of right there with you, looking at trying to get some of these numbers to come across the wire here. They have reported it, but it does seem like it's taking a little bit longer than we would have expected. But we are seeing a nice little small pop here to the upside as we are trying to digest some of these numbers.
Okay. The potential here for this to kind of extract itself from the crypto conversation, I think, is important, because there's so many reasons why this could be a company more tied to the reopen. People are going out, people are buying things, and you're seeing, Square transaction and the physical devices are everywhere.
Absolutely, they're everywhere. And so tied to that is the amount of users that use this every month. And that's one of the key numbers that are going to be looked at as well. Just finding out how it did, whether or not it trailed the consensus estimates like it did last time. User engagement, I should say, specifically is the key metric that people are looking for. They're also going to look at operating expenses, because in the past, inflation, obviously, it's been a huge concern. And so operating expenses are going to be key to see if those are able to stay under control with Square or not.
All right. If we do see the commentary here from Dorsey kind of veer into the world of the trading and crypto stuff, is that bad? I mean, do we want to hear him maybe sound a little bit more grounded, down to earth? Because the other thing, too, is when they kind of veered into the whole trading aspect, somewhat of a saturated market. I don't need to mention some of the competitors, but the idea is that they were entering that market in kind of a lofty moment that is very hard to sustain, the amount of exuberance around trading and trying to insert themselves into that. Have there been missteps along the way, Kevin?
Yeah, I don't think Jack Dorsey's really focusing on the trading aspect of Bitcoin or any type of other crypto itself. I think he's really trying to focus on the infrastructure. And I think the way that he's trying to bridge that gap is obviously to have some form of monetary policy or monetary attachment to some of that Bitcoin or blockchain technology, if you will. But yes, they pegged their company to it. Like I said, it's around 33%, 39% of total revenue when it comes to crypto in itself. But I believe the technology build out that he's trying to accomplish is really his ultimate goal, to be able to not only decentralize currency throughout the world, especially those that are in developed nations that do have issues when it comes to the financial banking systems and things of that nature, but also having it apply to other parts of the economy when it comes to infrastructure, building out networks, things of that nature. So I think there's more to it than just the aspect of dollars and cents of trading crypto. I think it's more of how can we build out the overall infrastructure in itself to be better and to be able to improve the well-being of people. And we are seeing the stock move to the downside now. The stock is down to $70.76, still trying to get this information from their investor services website. It does seem like it's taking a little bit of time here, but it is streaming at some point here.
Like on their website, investors.block.xyz. All right, so they've got the link there, but the report's not out yet. Seems like some of the algos have caught maybe wind of some of the numbers, though, as shares are dipping here a bit, but then they came back. So now we're 77, a little chop and a little back and forth. Here's what I'll say, though. He does want people to trade the cryptos on their app, right? Because you can buy and you can sell. The one time I did buy Bitcoin, which was in 2020, after we dumped a bunch more stimulus on, I did it through the Cash App.
Yeah.
And since then, I got all the updates. It was a nice trade. I got out.
Nice.
But what I noticed is that once the market peaked, you used to get updates all the time. You would get an update that says, Bitcoin moved 5% today higher. And then they kind of stopped. I don't get them anymore.
Maybe they're not interested anymore.
Maybe they're not interested in it, maybe because they stopped trading it, but also kind of maybe they stopped announcing, the price changes in a downtrend. I don't know, a little bit of conspiracy theory there.
Briefly, something else that we could look at when it comes out is success of Afterpay, whether or not it is successful.
Totally.
The buy now, pay later craze, since a lot of people, they don't have as much upfront money to spend right now, and we'll look to see if, this is what folks used to call layaway back in the day, if they're doing the buy now, pay later with Afterpay. I feel like it was one of the first, most recent platforms offering this to come out with this type of service.
Love that point.
Yeah.
$30 billion they spent on it.
It does appear that we are starting to get some data here. It does show that they had a net loss of 19 cents a share here. Yes, there's another announcement about a delay for the company as well. They did report net revenue at $4.65 billion. The estimate was $4.53 billion, so they beat on the top line here. And it does look like the initial report when it comes to the earnings per share is at 19 cents. Street was looking at 27 cents on an adjusted basis, but it is trickling out at this point. But it does look like there is actually a little bit of a delay with some of the speed here.
Yeah.
22 cents is the adjusted
again.
basis for the earnings per share.
Okay. So still operating at a loss. And I guess we just have to get used to that for this company at this point. All right, definitely going to watch to see if they talk about the Afterpay. The analysts were looking for the adjusted to be a little higher too. So despite a little edging out of the top line sales number, miss on the bottom line. Stock trying to pick a direction. Appreciate the help, guys. Renita Young, Kevin Green. Nice work here taking us through the reports, at least what we got so far.